So all lenders are going to stress test the rental income against the mortgage. They want to make sure that the mortgage you're going to have to pay is always going to be paid by the rental income. And they do this basically by stress testing. So all lenders will stress test very, very definitely based on a number of factors. It can be your income as the client, because lenders will tend to stress test a little bit more heavily on higher rate and additional rate taxpayers, because they're going to have to pay a lot more tax from their income in order to be able to have money left over to then pay the mortgage, basically. They get stress tested at a much higher rate than, say, for example, people that are maybe a lower rate taxpayer, because they won't have to pay quite so much tax on their income. The other thing that's a bit of a factor as well is going to be the amount of time that you fix the property for. You fix the mortgage rate for. So, for example, on a 2-year fixed rate, the stress test would be much higher than what it would be potentially on a 5-year fixed rate. And that's really due to the way that the PRA tend to look at long-term debt, and it means that lenders are happy then to borrow a little bit more money if the product's over a longer term. So this can make a really, really big difference. So say, for example, you're borrowing £100,000 on a 2-year fixed rate. You generally tend to find the property may have to be as much as £660 a month. Whereas if you put the same mortgage onto the same borrowing on, say, for example, a 5-year fixed rate, you only have to rent the property or have rental income of, say, £460 a month on a 5-year fixed rate. This is especially important in areas like where we are, which is down in the southeast, whereby property prices are typically higher than what they would be up north, for example. And it just basically means that stress testing is definitely going to be a factor you need to look at as you're kind of going through. Because, for example, in this example, we stress test the harshest if you're borrowing a couple of £100,000 against, say, for example, a property that was £360,000 or £370,000, for example. We need to stress test some of the region around about £1,500, £1,200 to £1,500 a month, which in this area is doable, but it's a little bit tight. And all lenders will stress test in different ways, and as they make up on principally 3 factors, which are going to be your income, are going to be the fixed term, and all lenders will just stress test differently anyway. So it's a case of really picking the best lender for your personal circumstances to make sure that it fits in with the lender's affordability calculations.